Everyone, welcome back to Tax Wars with Nicole and Don. We are so excited. One of our very first guests, we're bringing back tax attorney Randy Salter, who works in tax resolution, among other areas of tax. We want to bring him back to resume the discussion about two things that are going on right now. One is how the IRS was changed by COVID, and most importantly, at this time it is August 15th, and we have the new Inflation Reduction Act, which also included $87 billion. Of course, Nicole will spend that in just a few days, but $87 billion to hire a large number of IRS employees, and that's going to really focus on enforcement. And so Randy is going to be discussing some of those topics with us today and much, much more. So once again, Randy, I'd like to introduce you, but for people who haven't seen the previous episode that you did with us, could you just go ahead and tell our audience a little bit about yourself and how you got into tax resolution once again, for those who weren't able to watch the first episode where you joined us.
Yeah, for sure. Thanks, Don and Nicole. Appreciate being here. So basically, I've been practicing law for 32 years in California, and my first experience with tax resolution and tax law was when a friend of mine about 22 years ago got into tax trouble. Ended up owing about $300,000 in payroll taxes for his business, which was, of course, assessed on him individually as well. Had no idea what to do. And I had no experience with tax resolution, but I had to come in and figure it out and learn it. And we went through the process of doing an offer in compromise. And within about a year and a half, we were able to settle the entire debt for $30,000, which he was able to pay off over time, changed his whole life, saved his business, and he was able to keep going. And after that, I joined a tax firm. They were impressed with what I was able to do. And I had been with them for quite some time, became supervising attorney of that firm, and continued to work in this industry. Finally, I went into private practice, doing this on my own, just because of how I operate. And that's what I do now. And I love it. And it's what I do every day.
Awesome.
Fantastic. So we're going to talk about this first discussion about how COVID changed the IRS. What were some of the problems that the IRS encountered, including how many tax professionals and taxpayers are having experiences, a different experience than they previously had prior to COVID. Any thoughts on that, Randy, to kind of gauge how tax practitioners and taxpayers might be able to move forward? Because things have been getting quite behind at the IRS.
Oh, absolutely. So, and the whole pandemic for the IRS has been just a cataclysmic change in the way they operate, in the way things work for taxpayers, for tax professionals, and for the IRS itself. At the onset of the pandemic, right around March and April of 2020, the IRS had to temporarily shut down its on-site operations, including its mail processing facilities. The impact could actually be felt by taxpayers who were waiting longer for returns to be processed or to receive their COVID-related economic relief. And that was half of the pandemic's problem. The other half was that the pandemic also disrupted the IRS's tax enforcement programs that are both used to check the information provided by taxpayers and that the correct amount of tax is being paid or not paid to the government. So basically, what happened to enforcement when the IRS shut down in March of 2020? So to protect the health and the safety of IRS employees, because we knew very little about COVID at that time, and it was still taking many lives, between March and July of 2020, all in-person enforcement activities were halted. And along with that, so were all mail-based activities, because the IRS processing centers were closed. And so, like many businesses at the start of the pandemic, the IRS employees who had begun teleworking initially had very limited activity, limited ability to perform their tasks remotely. None of them had ever done this kind of thing, working remotely. It's just not how the IRS worked. Everybody went to one of their campuses or one of their offices and did their work. So some IRS employees, for example, examiners from the IRS Wage and Investment Division had not been previously allowed to telework. And suddenly they're teleworking. And so to adapt to this, the IRS created a number of new procedures to enable a viable teleconferencing workforce and teleworking workforce to allow its staff to safely interact with taxpayers and their representatives. So for some audits, IRS staff met with taxpayers outdoors, and that was groundbreaking. But eFax technology came along. Scanned documents were being processed electronically, allowing taxpayers to send in their IRS documents electronically. This was all bypassing all the IRS facilities that were closed. So anyways, we go through all this during the pandemic and things start to come back around. We start to come back to the facilities start to reopen. So what happens after the IRS programs have resumed? The enforcement activities have resumed and the audit activities have resumed. So there were interruptions to mail, there were interruptions to phone and print operations caused by these delays and backlogs in the IRS's enforcement caseloads. Even after the operations resumed, there were truckloads of mail and returns sitting outside major locations in Fresno and Memphis and Ogden and Holtsville waiting to be opened. Millions and millions of letters. There was no one there to open them yet. And then they started operating in shifts, and that's still where we're at. So the examiners and the auditors experienced significant work backloads, along with new process challenges and a reduced staff. So what do? Well, the IRS says in July 2020, we're going to freeze sending new enforcement related notices to taxpayers so we can catch up. Great. And as a result, IRS notices and activities were delayed for 6 months, 8 months, a year. I still have things that I submitted in late 2019 that I'm still getting responses to. Guess what? We just granted your taxpayers penalty abatement or your taxpayers, audit appeal. 3 years later, I'm shocked. So, that's what happens. But as enforcement has increased and collection activity has increased, not all activities have returned to their pre-pandemic levels, but they're coming around. And much of the activities and much of the processes that the IRS had to use during the pandemic, teleworking and doing things electronically, suddenly they've got new tools in their toolbox to make things more difficult for taxpayers. Unfortunately, that's what's going to happen, is that the auditing systems and the collection systems they're going to ramp up, and they're going to ramp up aggressively within the next few months. This is going to be like nothing we've ever seen. They're going to have to in order to catch up. And they now have electronic tools the IRS has never used in order to make this happen.
That's correct.
Yes.
However, I understand where you're going. That makes perfect sense. There is a bit of the IRS is going through an existential crisis as it continues forward, adjusting over to the electronic method of communication. For the past, how long has the IRS been around? 80 years now. The challenge is that the primary way that the IRS communicated in the past was by U.S. Postal Service.
Yes.
Right.
U.S. Postal Service. That was their primary means of communication. For the most part, that was their only means of communication. And the IRS used to tell you, no, we will not email you. We didn't send you that text message. We didn't leave you that voicemail. Those are all scams. If someone calls you, texts you, That wasn't us. That wasn't us. They drilled that into the American populace.
Absolutely.
So now, for the IRS, so, oh yeah, we did email you. Oh yes, we did send you a text message. And oh, by the way, join our Facebook and Twitter so you can stay in touch with updates.
Yeah, those work.
Yeah, I'm friends with IRS on LinkedIn.
So it's going to take a while for the legacy individual taxpayer to adjust to this, especially those who do not use. There's still a lot of people who don't use any type of technology. Okay, my mother, one of them, and that's a good thing because it only gets her in trouble. How long is that process going to take, and what other challenges are taxpayers going to face, tax professionals going to face, and the IRS going to face as we go through that transition? Any thoughts on that?
Absolutely. So many collection enforcement activities across the IRS were simply not telework ready when the pandemic because they relied largely on paper processes, as you said, postal mail. This is how the IRS operates. They send you a letter, and in my case, they send me 3 letters, copies of the same letter in one envelope. So I can give one for me, one for my client, and one for the file. I've never seen anything like the paper wasting at the IRS. The thing is now is that Nicole's laughing because she understands.
Yeah, I was like filing cabinets full.
I have moved almost completely to a paperless filing system because I can't take the volume. Yep. The IRS, I scan everything. I've got these high-speed scanners. We just put every piece of mail in, and we keep it electronically, because if I had to take care of every piece of paper the IRS sent me for clients, I would need 55, filing cabinets. It's ridiculous. So IRS managers know that the IRS needs to move from paper-based to more digital processes and into the 21st century. Some of the new technologies and strategies that the IRS, as I mentioned, used to manage enforcement activities during the pandemic are going to stick around. That's actually going to make enforcement easier for the IRS. So that's on one side. And the other thing is that we may have all heard about the Inflation Reduction Act, which is now going to inject $80 billion into the IRS. From what I understand from my people on the inside of the IRS who know how this is all going to work, more than half of that $80 billion goes towards collection activity. They're going to put $45 billion towards new collection processes, new collection employees. They're going to hire new revenue officers. This is absolutely what's going to happen. And I think, in the past, many taxpayers have avoided audit. They've avoided their collection activities for the last several years. They owe a lot of money to the IRS, but the IRS has virtually ignored them. And that giant is about to awaken. And people are going to be shocked when they see just how aggressive the IRS can be. And they're hiring independent collection agencies to do their work, which, I don't like. I don't work with these independent collection agencies. They are, forgive my language, but they are a bunch of bozos, to be quite honest. They just don't operate the same way as the IRS. They don't understand our language. And so, I've virtually stopped working with them, and I simply write them a letter and say, look, you're going to return this to the IRS. But, even within the IRS, collection activity is going to ramp up significantly, particularly as to the middle class, because that's where they're aiming this $46 billion is. They want to go after the people, that are making between $100,000 and $400,000 a year for a family. And that's going to really increase collection, and it's going to increase audits towards many, many taxpayers. I think they're going to be shocked at the activity that's going to happen in the next probably few months, if not the next few years.
Yes, yeah, Don and I have been seeing that recently. I wonder if you've been seeing it as well, where we have clients who don't really owe very much to the IRS, maybe 30, 40,000, and they have a revenue officer assigned, and we can't really figure out what would make them assign a revenue officer to the case. But
I mean, I'm getting this a lot, especially in rural areas. I'm not sure if it's just because there's nobody else to do the work, but, you know, revenue officer limits, their thresholds were changed during the pandemic just so they could handle the volume, from $250,000 up to 1 million. Now we're seeing some cases that are more difficult assigned to revenue officers, even if they're less than that amount. And it's a little shocking to me sometimes when I do get a revenue officer in some rural town, you know, assigned a $40,000, $50,000 case. So, you know, this is going to happen where you've got not enough employees at the lower levels to handle everything. Revenue officers are going to get some of those cases still, is what I'm told. So, and, you know, dealing with a revenue officer is a whole different game. So,
Yes.
Well, a lot of those cases is because they have a number of past due filings, sometimes going back 7, 10 years.
sure.
And a lot of times it's involved with 940, 941 payroll taxes is what we're seeing, even though the total debt liability amount is under $50,000 in some cases. But more so, there's another thing that COVID caused. COVID caused the PPP loans and the stimulus money. And we were talking about this. Our government is fully aware. You can see it on the news, you know, on broadcast news and various stations where they're trying to report the fraudulent PPP are errors in the PPP loans.
Yeah.
Now, the SBA is they're the ones who are responsible for doing the auditing, but we've seen situations now where the IRS would have to get involved because some of the situations are where the business overstated the number of employees and falsified documentation
Yes.
to back up their overstatement. And there are some situations where we've had taxpayers call us and they go, yeah, I hadn't worked at that company in 10 years, but yet they W-2'd me and sent over income statement that I worked there in 2019. I don't even live in that state any longer. And there was like a week where we got 4 or 5 of those types of calls. So it's getting interesting. Any thoughts on how that's going to fall out? Because that's going to be huge. And there's also the what do you call the EILD loans?
EIDL.
EIDL.
Yeah. So at some emergency, you know, loans that people got, people who didn't qualify for the PPP loans were getting EIDL loans. And, you know, those basically were for people who needed operating capital during the pandemic, but didn't have a lot of employees. These were for smaller businesses who may only have a couple employees. You know, and those are starting to come due now as well. Everybody, you know, and so what happens as usual is, although it was the SBA that distributed these funds to everybody, you know, sometimes they're going to do enforcement possibly through the IRS. And there will be things happening through the IRS, and, you know, and everything is delayed. I mean, everything as far as people are getting W-2s, you know, from companies they worked for prior to the pandemic who forgot to just, you know, forgot to submit. And the IRS is coming after those companies now and saying, hey, we never got your W-2s. We never got your W-3s, your annual returns. What's going on? So yeah, I mean, everybody is absolutely catching up, but I think this, the EIDL loans and the PPP loans for people that didn't get forgiveness, that's going to catch up with people, and businesses are going to probably be under a strain, you know, with all their activity, all of their expenses because of this. So you know, there's going to be an absolute boom in tax resolution activity and needs for those of us in the industry.
Absolutely. However, you know, I always look first as well. I know we're talking the $87 billion that was earmarked for the IRS to hire new employees. Okay. Now, I was just like, and then the number of employees they're also talking about needing to hire is also like 87,000.
Yeah.
Well, do the math. Okay. Do the math. I'm sorry, but irrespective of that, now we're talking about federal employees here, and we're talking about the IRS, whether you like it or not. It is a bureaucracy.
Sure.
Okay. And can from time to time be politicized, as we've seen in recent years. I'm kind of unclear as to how they're going to train, restructure, and clean up after we've had this huge 3 years of massive mess, from COVID to the stimulus to the IRS being backed up, working from home. Not everybody can work from home. I mean,
Right.
that's a whole different thing that you have to adjust to, especially, you've been getting on that train and going to work and as an IRS employee for 15, 20 years.
Yeah.
You start working from home with, Aunt Mabel and Uncle Jim there, the cats, the dog, the parakeet, and,
Right.
People coming by. That's going to be challenging. So there's a lot of challenges for everyone here. And sometimes you get $87 billion, you just tend to throw money at everything, and it doesn't necessarily work.
Sure.
So I'm kind of just get your thoughts on how fast do you think all of this may move forward? I mean, we've seen it now,
Sure.
but we might not see real solutions. I mean, COVID moved pretty fast too.
Absolutely. Yeah. So here's what I think. And, obviously teleworking has changed all aspects of our lives. I mean, I don't know about you guys, but I call tech support now for my computer or from some software I use. And I'm talking to some guy, and I'm hearing roosters crowing in the background constantly. And I'm just like, God, this is just bizarre. It's surreal. And you hear babies crying, as you mentioned, and it's like, look, people are working from home. Life is happening around them. So, that's kind of part of the funny part of what we do now. But like I mentioned before, some of these new technologies and strategies that the IRS did use in handling enforcement and collection activities during the pandemic, they're going to stick around. So there's not going to be as much learning curve as we think for the IRS to get ramped up and right back into the game. I think it's going to be happening faster. It's going to be happening faster than a lot of us think. So we also lost tens of thousands of IRS employees during the last 3 to 4 years who just simply decided they were done. And so a lot of people are moving up in the chain, and they're going to come up from customer service and going into the ranks of, revenue officers. A number of people that I've talked to on the PPS practitioner lines are working to become revenue officers and enrolled agents so that they can work in higher levels at the IRS. They've had the time while being at home to start taking courses. And so this is happening. And so, but like I said earlier about this $80 billion that's been earmarked for the IRS from the Inflation Reduction Act, more than half of that is going to collections. And so there is going to be a collection boom, and not just against the big guys and not just against the small guys. It's going to be right in the middle. It's going to hit everybody. And people better get their houses in order real quick, or be prepared to call a tax professional to help them immediately, because you cannot wait until this behemoth comes back to life, because I have a feeling we're going to be just blindsided by how much is going on.
What segment of the population, what demographic do you think is going to be targeted the heaviest once the IRS has its teeth back and they got boots on the ground? Do you think it's going to be, the upper middle class, the middle class, or are they going to go after the guy who's, who works as the fry chef at McDonald's?
Yeah.
What are we talking about here? Which demographic and why?
So in the past, those who are in the lower income brackets very often got targeted with audits for whatever reason. I have some ideas. Many of those people are preparing their own returns. And when we talk about, well, I'm sure a lot of our practitioners will realize when we talk about audit magnets, things that will pull an audit towards you like you're a magnet. Doing a self-prepared return is one of the first things that will get you targeted for an audit. So we know that already as professionals. Many people make mistakes. They think, oh, I've got TurboTax. I can do it all. I don't need a CPA or an enrolled agent or anyone to do my taxes. I'm just going to do it myself. Big mistake, because mistakes happen. No one, in my opinion, should be doing their own tax return. I'm a tax professional and I have someone do my own tax return because I don't trust myself not to catch something. So it's always good to have a second set of eyes. But on top of that, so that's going to change. And of course, the wealthy are always, a certain percentage of them always going to get audited just by automatic. The computer chooses them. If you're making more than $400,000, you're going to get a certain percentage of them that are automatically audited. What's been missed is the middle class. And I think that is where this money that's coming in, this $46 billion for collection, is going to hit the middle class very hard. There are going to be a tremendous amount of collection ramp ups for people that have only owed $20,000, $30,000, $40,000, people who could have just called the IRS, but either don't have the wherewithal or can't get through on the tax lines to make an arrangement. And so they're going to need us as professionals to get in there and do the work, especially if they're getting levied. And I think those are coming back too. I mean, levies have been on hold, and garnishments, wage garnishments and bank levies, those have all been on hold virtually for the last couple of years. And I think that's about to change. I think everybody might have just noticed recently that they started getting new CP 504s for those older balances. And a CP 504 is very important to take note of, because those are not something that comes just once. The IRS will send those again when it's coming time for collections. And so if you as a practitioner know that your client has gotten a CP 504, if they get it and come to you, or if you get a copy of it, and you know that they've not really been paid attention to for the last few years, you need to take note, because that CP 504 is a wake-up call to say, look, we're looking at your client again, wake up, because they're about to get levied, they're about to get garnished.
You know what's interesting, Randy, that there's a whole generation of tax professionals working in tax resolution who have never experienced an account levy from the feds, and their clients getting an account levied, a bank account, or even a paycheck from the feds, and at least not on a regular basis.
Right.
I recall back, going back to the early 2000s, where that was the primary book of business that you do, with clients getting bank levies or wage garnishments from the IRS. And that hasn't happened. It started slowing down. I want to say in 2015, you saw a gradual, an increase, gradual drop off of federal levies and garnishments. By the time we got to 2019, I haven't seen any since early 2019. Zero, nothing, nada. Now you're saying that this is going to come back full force. And I agree with you, but I'm not sure exactly in what way it's going to come back and how. Yeah. So your thoughts on that, and also the timing on that, because that's when when you have a wage garnishment or a levy, that's when you absolutely positively have to hire someone in tax resolution overnight. Okay?
Absolutely.
Immediately.
So why has the IRS not been doing levies and garnishments since the pandemic started? Well, initially it was because everybody was just shell-shocked and said, look, we can't do levies. Basically the administration at the time said no levies, because people are in the middle of this pandemic. We can't be hitting them with garnishments, wage garnishments, and bank levies right now. So let's just hold off. Well, then that time period ended. They said it was going to go till November of 2020, and then they would start again. And I'm thinking, well, okay, it's got to start happening soon. No, nothing happened. So what's going on? Well, the IRS has been so behind with their truckloads of unopened mail at their major campuses that they were afraid to start doing levies and garnishments, because someone says, no, I sent in my amended return. I sent in my appeal, well, they haven't been opened. Well, that's going to be a real problem for the IRS if they start levying people. What are you going to do? You're going to start getting all these phone calls from people, and you're going to start having to release a lot of wages, wage levies, and a lot of garnishments, and a lot of bank levies because there were mistakes made. And I think the IRS just doesn't want to incur the cost of those mistakes, because it does cost them. If they take people's money and then have to give it back because of a mistake, they're paying interest on that. So there are issues there. So that's I think we're about to see this become very, very aggressive. From everybody I've talked to that I know within the IRS, and I have a lot of friends who work in the IRS now, it is going to be ramped up fairly aggressively.
Very, 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 very good, Randy. And just on another note, with just the COVID stimulus checks that went out, and then because you had so many different types.
Sure.
You had the federal stimulus checks. You also had the states also had certain stimulus that they were sending out. We had the moratoriums in both rent and foreclosure, and so there's a number of things economically, financially that are occurring, and I'm just curious because the thing about COVID is that for the first time the IRS was given an assignment that the IRS was not designed to do, was never designed to do, and that was to send out these stimulus checks.
Oh God,
the IRS goes, we're a collection agency. We don't give taxpayers free money. Okay, you're asking us to do that's not our mission statement. So and now people are, and I'm sure you get them too. People are still calling saying, believe it or not, Ryan, we're almost.
Where's my stimulus?
Where's my stimulus check? I never got it. Uncle Steve, I'm not paying my taxes until I get that check, Mr. Salter.
Yeah.
Okay.
This is absolutely happening, and still happening. And not only is it the IRS that's having to pay people their COVID stimulus money, and many of them are behind. Many of them have not been paid. Many of those people, but us as tax professionals, we're getting into our 2021 tax returns earlier this year. And we're having to note that people haven't received their stimuluses so that people can get their refunds of their stimulus money. I mean, that's basically the way they're doing it. We all know this. We've all been doing this, checking with our taxpayers. Did you get your stimulus? So, that's been a little bit crazy, but I've still got clients coming to me 2 years later now saying, I never got my March 2020 or my April 2020 stimulus check, of $1,200. I never got my money at the end of the year, my $600. I never got my $1,400 in 2021. What am I going to do about this? And so, we've sort of have to step in and say, what's going on? And this has been a huge workload impact for the IRS, which, again, as it's winding down, they're going to be able to pay more attention to collections. But yes, for a while, they were in a different business altogether. It's been a little bit crazy. So, but if people have not received their stimuluses, they need to engage a tax professional, probably to get involved to make sure that's done correctly. And just because it wasn't on the 2021 return doesn't mean you can't go back and, amend to fix that. If you just find out that someone didn't get their stimulus, they're not the Grinch. They're not saying you don't get your stimulus. You still can go back and recover these things. So.
Our issue is that we're finding just within the industry is when you get someone calling you and saying, "Can you help me get my stimulus check?" And there's really not enough there on the table.
Oh no, this is not a big thing.
Yeah, it's not a big thing. However, it can cost the tax professional a lot of time and effort to actually wade through everything to resolve the problems so that the taxpayer gets their stimulus check.
Yeah.
And there's been a lot of disgruntled taxpayers because they can't find anyone to help them get their, and I don't mean to sound uncaring, their entire $600 stimulus check.
Yeah.
You know, so that's caused a problem within the industry. But here's the thing that I'm questioning. Okay, how long? Because the IRS has a lot of problems to solve.
Mhm.
It's not just one. It's not just one. And just look at the generations. I mean, you said a lot of people left the IRS. Those were the boomers. Those are the ones who knew how to work with those old computer systems. They actually knew most of the tax code. Okay, and now you have these people who are coming up from customer service. Their previous job was a barista at Starbucks. All right, and aren't necessarily known as, you know, for lack of a better term, known as the great communicators and everything. However, most of the wealth and most of the people who are going to be still paying most of the taxes because of the just economically they have more assets. Is the boomer generation still?
Sure.
I mean, that's the way I look at it.
Well,
And
that's been.
The two generations don't communicate very well.
That's for sure. The generation that does not have easy access to email and Zoom and video conferencing and teleworking and all this, you know, the good thing and something we should be aware of is that the younger people that are coming up from customer service into the collection jobs, and that does happen quite a lot. A lot of people go from the practitioner lines into collections, higher collections, revenue officers and revenue agents. You know, they're taking their enrolled agents tests. A lot of these people are very tech savvy. And I think the IRS has been sort of also unprepared for the fact that most of these younger employees, let's say, you know, 35 and under, were raised with internet. You know, they don't know any different than email and video chat and doing things by and sending documents electronically. And, you know, and it is strange for these people coming in and having the IRS tell them, oh, well, we don't accept email of documents. And that's going to change for practitioners. So both practitioners have to be ready for the electronic change that's coming, because the IRS is going to very soon start accepting electronic documents from taxpayers, taxpayers representatives. Not from the taxpayers themselves, but from the representatives. We will now be able to send in tax returns electronically, documents electronically, audit responses electronically. And so again, the practitioners better be ready to handle this kind of activity. I still know practitioners who, you know, do not know how to do things electronically, who are not good at processing this, who can't scan a document into PDF. And I'm just like, how are you going to handle this when you're still sending things by mail? And I keep telling these practitioners, look, that appeal you sent by mail a month ago is still sitting in a truck in Memphis or Kansas City or Holtzville. Stop it. You know, you need to learn and how this is all changing. Fax it, do whatever you need to do. You know, I've had a lot of revenue officers tell me, hey, you know what? We weren't really supposed to do email before, but they're letting us now. So I'm going to communicate with you by email. I've got a dozen revenue officers I'm talking to by email every day. We're getting things done faster. We're getting appointments done faster. I'm finding out what they need. They don't have to send me a letter now. You know, they don't have to send me an IDR telling me here's what I need. You know, here's an email. Here's everything I need. Great. I got it in a day. You know, everything is changing. And so these younger people, so what this means is that enforcement is going to catch up with the technology as these younger people come into these positions. You know, the millennials and the Generation Xers who were raised on internet, you know, they're going to understand this. And I think that's going to make collection easier for the IRS. It'll make things easier for us as practitioners, so long as we're caught up with the technology.
Fantastic, Randy. Listen, we don't want to go too long. You are impeccable in the way that you explain things to our audience and to everyone. I just think you should have your own YouTube channel or your own TV show, because you do it so well. Everyone appreciates it. We'd love to have you back. I believe this whole topic with the Inflation Reduction Act, with this hiring of all these officers, revenue officers coming on, I think that many people would have tons of questions for you, and because you're able to explain it so well, especially tax practitioners, young and old, experienced and new ones. So we would love to have you back sometime as we move closer to September or just beyond. How does that sound?
Absolutely. I'm around at your need. So just let me know.
Excellent. Can you tell our audience how they can get a hold of you, Randy?
Sure. So they can either go to our website, which is at www.taxreliefclinic.com. And that's one way to get to us. And the other way is, of course, they can just call our 800 number if they want to reach me, which is 800-844-7750. I'm happy to talk to practitioners if they have particular, client issues that they're concerned about, and they need to talk to someone who has perhaps more experience in resolution than they do. And I will work with them. And, I'm not at all concerned about talking to practitioners. And I understand that not a lot of practitioners who are used to doing tax preparation have a lot of experience in resolution, and I'm more than happy to help.
Fantastic. And before we let you go, any final thoughts, anything that we didn't cover that you did want to mention with regards to the current state of the IRS, and also how us coming out of COVID and the inflation rate and with the the bond market and interest rates, how do you think it's going to affect people? Because I remember back, you became very active. You went through the mortgage crisis of 2002, 2007 and 2008, and saw how that just really changed the economic landscape for so many taxpayers. So it's still affecting them today.
Yeah, absolutely.
So how do you think this current scenario is going to play out? And do you think the IRS is doing the right thing to solve it?
It's funny. Like, I remember this saying from history. They used to say, peace is good for business. And there'd be another sign right next to it, and it'd say, war is good for business. There's two dichotomies, obviously. It's true for collections and for tax resolution. Good economic times are great for business because people are making money. And they're going to have tax problems. Their income is increasing. They're making investments. But bad economic times and recession are also good for the tax resolution industry because people are often in financial difficulties. And I remember in 2008, after that recession started, and after everything that took place, business just boomed. For several years, we could not hold the doors back because there was such a flood of taxpayers with tax problems right when that recession began in 2008. So, good or bad times, there's going to be business for us. And yes, people better be aware the IRS is coming into the 21st century slowly, but they are going to have the funding to do it now, and which they've not had before. They're going to have the funding to hire new collections representatives, new revenue officers, new revenue agents, and practitioners better be aware that their clients are going to be subject to these new collection activities. It's going to really ramp up, and I think people better be aware of it and not caught off guard.
The IRS had put out an ad. It actually went viral before they pulled it from the internet. The ad specifically was just indicating that they were looking for people who were willing to work for the IRS, who didn't have a problem. I'm paraphrasing here. Who didn't have a problem pulling out a gun and carrying a gun, pulling out a gun, and I don't know if it said shooting somebody,
using deadly force.
Had a problem with using deadly force in order to collect for the IRS. It went viral. It got so much criticism. Apparently, the IRS pulled the ad and chose not to comment on it. It went not only went viral, mainstream news was talking about it. I think they still are. I know Nicole can't stop talking about it because she's like, "Where do I sign up?" She goes, "They don't even have to pay me. I'll go out and shoot people for fun." Right?
Yeah.
What would you? My question is the IRS has always been known as the Michael Rusbrook would call the IRS the ultimate boogeyman. And that's what people feel about when something like that goes out and it hits the mainstream news. should the average taxpayer be afraid of the IRS to the point to where, you know, that they might have property or injury at gunpoint by a IRS, you know, person, agent, or authority?
Yeah, you know, what I would say is the IRS is one of the largest collection agencies in the world. This is what they do, and they do it against 350 million Americans collecting taxes and collecting revenue. You know, is a IRS agent with a gun going to show up at your door? You know, I'm not sure that the chances of that are significant, but could an IRS revenue officer show up at your door about collections with a badge? Absolutely. Do these people have significant abilities to collect against you, to contact your friends, your employers, and talk to them about your debts? Go to your bank, pull your credit cards and see where you're spending money? Yes, absolutely. And so people do need to be, you know, I wouldn't say afraid so much as I would say aware. You know, don't be an ostrich. This is not the time for anyone to stick their head in the sand, because it's not going to work for you. The number one thing you need to do with the IRS is stay in touch. You or your practitioner, you as a taxpayer or your practitioner, need to communicate. And that is the ultimate currency of dealing with the IRS, is communication. If you don't communicate, your client is going to get levied. Your client is going to get their wages garnished. They're going to have their passport taken away if they owe enough money. These are all things where I think people need to be aware that communication is everything. You better know the systems. You better know how to get through to the IRS without waiting 2 hours. You better know what to do to get in touch with the people you need to reach so that you can represent your client effectively and, you know, and quickly before the bad stuff happens. And it certainly can. So,
Randy, thank you so much.
Great advice.
Love to have you back. We're going to have many different links in terms of how you can reach Randy's website down in the description box, along with some of the things that we just referenced as well, as far as dealing with the IRS post-COVID and the Inflation Reduction Act, so that you can, our audience can access those as well. Randy, thank you once again. Love to have you back. You're always a pleasure to work with. And as I always say, the best tax resolution attorney on the planet, who can explain things simply to everyone. No one has that skill but you. Okay? And we look forward to having you back soon.
my pleasure. Happy to do it. Thank you so much.
Thank you.